Hello there. We end this financial week with a new British government with Theresa May at the helm and Philip Hammond as the Chancellor of the Exchequer. Well, we've got Boris Johnson. He snaps up the Foreign Secretary position. Meanwhile, the Bank of England decided to keep the benchmark interest rate on hold and the FTSE gained. Meanwhile, Asian markets mostly gained on the back of stronger GDP figures from China. While across the pond, US markets rallied thanks to some better than expected earnings, including from the likes of JP Morgan. But will this momentum remain? That is the question. Well, let's go through some of the data releases that will mould the week beginning July the 18th. So on Monday, we get a report on the Australian economy and a closer inspection of the housing market over in the US. Also want to mention the fact that US Republicans will nominate their choice for president at the convention in Cleveland. As we know, Donald Trump is the party's presumptive nominee. All right, let's talk about Tuesday because we have got more from Australia. We've got those RBA meeting minutes, UK inflation, Germany economic sentiment and those US building permits. On Wednesday, we start with UK data, including the unemployment rate. We've got mortgage applications from the US, Eurozone consumer confidence and oil data. Thursday, we start in France for the business confidence, UK retail sales, ECB interest rate decision, probably the biggest event of the week, and US initial jobless claims, as well as the Philadelphia Fed manufacturing index from the US as well. Finishing up the economic week with Japan's manufacturing index. Lots of PMIs from EU, Germany, France and Italy's industrial orders, retail sales too, Canada Consumer Price Index, as well as the retail sales. And we're going to finish up with the US Market Manufacturing PMI. I'm joined in the studio by Josh Mahoney here. We're going to have a chat about all of what I've just gone through just now. It's going to be a big week, but probably the biggest event of the week is going to be that ECB meeting because it's the first one since the Brexit.
It is, and I guess it's a revisit of what we've seen in terms of the Bank of England. Now, everyone expected the Bank of England to actually ease because there's so much fear surrounding the repercussions of the EU referendum, but they didn't. And the reason why is because of the fact that we haven't really seen anything ever since that in terms of economic data and the like. So everything really is sort of presumptuous. And one thing that central banks generally shouldn't be doing is just presuming things. They like to see a lot of data and it takes them a while for them to make decisions and to relay that to the market. So yes, we are expecting something in terms of the ECB, but lessons should be learnt from the Bank of England because we didn't see something from the Bank of England and most people thought we were going to. So we could actually see something similar in terms of the ECB, whereas they might actually want to hold off and see what's happening from a sort of economic standpoint, how that's sort of influencing sentiment within the Eurozone, and therefore take their decision from that. If they were making a decision and actually easing now, then largely that's going to be something that's based on presumptuous effects rather than actual effects from the EU referendum result. So it'll be an interesting one. But of course, the big mover that I wanted to be talking about in terms of that market is euro dollar. Of course, economics tend to impact the currency more than it does the stock market because there's always different effects that you can pick through in terms of the stock market, in terms of the benefits or the negatives of that action for different stocks, whereas a currency is a little bit more of a true reflection. Now, what we can see recently is the fact that we've been seeing this sort of downtrend coming in play over the past, say, 2.5 months. Now, yes, we've been seeing some sort of resurgence recently, but as you can see yesterday, this long upper shadow, we're seeing a similar kind of thing today. I do think that we're going to return back onto a bearish front soon enough, and that plays into the idea that we're going to be seeing easing from the ECB soon enough. But we're not guaranteed to see easing from the ECB this coming week, and as such, if we did, it's likely that we would see easing and would see this move further towards the downside. 1.1, 1.09 is likely in the near term, but if we didn't, and like I said, that is a distinct possibility, we could see a deeper retracement of the sell-off that we saw post-referendum, at which point you're going to be looking at around about 113 kind of mark would be a very good entry to go short if you can get it. Most likely it probably wouldn't happen. You might be looking at 61.8, but nevertheless it's really going to be a game changer for the euro next week.
And obviously Mario Draghi, he's got loads to consider now because he's got the Italian banking crisis, also the bigger banks in the region, the likes of Deutsche Bank as well too, so lots for discussion this week. Let's talk about the UK jobs data as well. Now, I wanted to mention that there's actually been Well, it's a bit of market research for you from Glassdoor, the employer rating website. They've done a list of the most popular places to work, and apparently the best city in the country is Cambridge. That's just a fact of the day for you.
Noted.
And London isn't in there. It's followed by Milton Keynes and then Nottingham.
Well, it depends how you judge it, really. I mean, if it was based on your wages, you'd probably say London, right? If
Well,
you quality of life, I would probably say maybe not London.
No, definitely not. It's chaos here.
There's not enough greenery.
Yeah, no.
We're lacking greenery
Too
here.
many people. Apparently it's going to be hot this weekend, though. Just thought I'd mention that. OK, UK jobs. What can we expect from this one?
Well, look, ultimately, it's always going to be important. Same way that, say, a US jobs report is always going to be important. Sometimes US jobs reports more important than ever. But I would say that this would be sort of more important than ever. Apart from the fact that half of the figures are coming out from May, the other half are coming out from June. Most of June we didn't really, we saw the sort of the precursor to the EU referendum. What people want to know is what's happening since that decision to leave the EU. And we still don't have that yet. So yes, we are likely to see big volatility off the back of this. But in terms of taking this as a sort of lead for what the Bank of England are going to do, look, ultimately, if we saw a little tick higher or a tick lower in unemployment or a shift in terms of claimant count, that's not going to make much of a difference because they're thinking in this new world, what's happening in this new world? And even if we saw an improvement in terms of the jobs prospects, they're not worried about what was the job situation like prior to this vote. They're thinking about what's happening now. And for that reason, to a great extent, you can almost disregard some of the findings of what this report will be. Nevertheless, we're going to see volatility. It happens all the time. And so I thought I'd sort of change it up. Rather than just constantly focusing in on FX, I thought I would look at the FTSE 250. FTSE 250 is more in line with what's happening in terms of UK jobs because it's more UK focused. And therefore, I thought I'd look at the FTSE 250. Now, I'll take it out to the weekly time frame, which I think is quite interesting. And you can see that we've got this sort of descending trend line providing resistance. Now, we also have a convergence of both the 100-week and the 50-week SMA. And that has all come in around about the area that this market has topped out so far this week. Now, we did see this big move around the bottom where you saw these long lower shadows, and as such we've been seeing a rally ever since. We marginally managed to create new lows, so I wouldn't necessarily say that we've negated this downtrend quite yet, and considering that we're getting closer towards the areas that would need to be taken out to negate that downtrend, I wouldn't be surprised to see the FTSE 250 selling off once more. It doesn't make that much sense that everyone can all of a sudden be so positive about everything straight after this EU referendum, which is expected to really hit the UK economy quite hard and is expected to put us back into recession. Yes, we're likely to see a shift in terms of monetary policy, and I guess this is a sort of tug of war between what's important, the UK economy that they're essentially doing business within, or the fact that there's going to be monetary policy that should be helping the likes of the stock market. So it's going to be an interesting one to see it play out. You can see that it's largely started turning around, but it's been largely flatlining this week, same as the FTSE 100. But I would say we'd have to break up above this sort of 17,290 kind of mark for us to be sort of negating the downtrend that we've been seeing. And considering we've come into this trend line resistance, it's going to be interesting to see if it sells off.
OK, a new world. I like that. It very much is, yeah. And actually, something we've got to talk about is oil, because actually this time last year, it's what everybody was talking about. It was a headline discussion, but now it's on the back burner, isn't it? Because of the Brexit, because of the Italian banks and US jobs and everything else. But we've still got this glut.
Yes, and I guess the interesting thing is it used to be the core driver of markets. So you would see whatever direction oil went in, you'd see the FTSE follow, because we have so many companies that essentially deal in oil and energy that, it's going to impact them heavily. And also pretty much the commodities market was moving in lockstep with the oil market. That's not necessarily the case at the moment. And actually it's interesting to see that we continue to see drawdowns in terms of the US crude inventories at the same time that actually, when we're finally seeing that, we're actually seeing oil sell off quite a bit. So I find that quite interesting. Part of that story, I guess, would be the likes of Iran, where you see the US pulling out and you see Iran actually continuing to ramp up production. Nevertheless, this week will be potentially the 9th consecutive drawdown in terms of US inventories. And from where I was looking, I couldn't find the last time So, you know, it could have been pre-2007, but certainly the last like 5, 6, 7 years, I couldn't find anything anywhere that had more than 8 consecutive weeks of drawdown. And that has to say a lot, you know. It's clearly changing the amount of production that we're seeing in the US. The next question is, at these levels, are we going to see production ramped up soon enough in terms of some of the shale producers? Nonetheless, from a technical standpoint, the daily time frame looks like this, and we can see that we were in a triangle, broke down from that. So essentially, we're now near enough in a falling wedge pattern. If I was to take a new trend line and draw that in there, or a rectangle, that would point towards, a descending trend line, channel even. That would point towards a bigger retracement. And the fact that, if we take it into the hourly, the fact that we have not taken out this previous low here and we're now starting to rally, to me is a bit of a warning sign that we might see a deeper retracement back up possibly to this 76.4. And essentially the fact that we've now crossed through this 200-hour SMA alongside this descending trend line points towards the potential for another move higher. Again, let me take it back to the daily time frame and show you that ultimately we could take up this previous high, but that still wouldn't negate the trend on the wider time frame that would still point towards a potential move back to $50 or $49.50 before selling off once more. So I do expect further upside for the near term, but we haven't seen signs to say that the sell-off that we've been seeing over the last, say, month and a half is over, and therefore short term we could see a bounce, but I do think over the medium term we could have further downside to come.
Okay, so we're watching oil, UK jobs and the ECB as well. Let's march on because there's certainly a lot on the corporate agenda. We'll start with Monday just here, and we ease into it there. You've got Netflix, you've got Yahoo as well, and Bank of America. So US financials still posting their earnings. On Tuesday, getting busier. We've got Royal Mail there, Rio Tinto as well. We've just been talking about oil. We've got Microsoft as well, tech giants out this week. Again, another US financial with Goldman Sachs and Volvo too. Midweek, we've got, a whole plethora, an eclectic variety there. You've got eBay, Intel, Anglo-American, BHP Billiton. So again, the energies, US financials there with Morgan Stanley too, and tech giants American Express on the bottom too. On Thursday, this is the busiest day of the week, as you can see. Feast your eyes on all of that. We've got Unilever, Easyjet to come, Premier Foods, Starbucks, Visa, Amazon, General Motors, some huge blue chip companies. To finish off the week, we have got Heathrow on there, Vodafone, Honeywell, Whirlpool and Moody's Corp as well, and General Electric. Now, I did mention the fact that we've got the US financials out in force. They've already been posting this week. We had JP Morgan, we had Citi, but we do indeed have more to come next week. We've got Josh, he's still with me. Oh, we have got Goldman Sachs, right? Now, the interesting thing about this is that they all face the same challenges, right? We've already spoken about oil. That's still an issue for them. Yeah. Slowdown in China, also an issue. But what we thought was going to be an issue was this Brexit impact. But actually, the volatility has turned out to be an advantage for the likes of JP Morgan.
Yeah, well, look, I guess the backdrop is that you're starting to see everyone outperform. Pretty much, like you said, JP Morgan outperformed, Citibank outperformed, Wells Fargo was flatline in terms of EPS, but, you know, certainly that's not coming lower. So 3 out of 3, none of them have come in lower than expectations. And now we're feeding into next week where actually people are starting to think that things look a little bit better for banks. The one thing that's really been holding back banks recently is the fact that we've got such a low interest rate environment, and with what's happening in terms of the EU referendum, the expectation is we're going to see lower for longer certainly within Europe. In terms of the US, it's probably not going to see a rate rise in terms of 2016, and that's going to have an impact. But certainly when you're looking at what happened with JP Morgan, they pretty much gained across the board, and that's going to be helped by the fact that actually we're seeing an improvement in terms of oil prices. We're also seeing an improvement in terms of sort of stock market valuations as well. So the investment banking side of the business is going to be doing well. We've seen a stress test recently coming out of the US that actually showed that they're in pretty rude health, pretty much all of the major banks over in the US. So actually they're not necessarily in as bad nick as people had previously thought, and therefore, you know, it may be a good time for people to be getting into these markets. So that's certainly, it feels like they're sort of waking up at the moment. The daily time frame for Goldman Sachs looks something like this, and that is that essentially we have been trending lower over an extended period of time. Now we are breaking back towards a big area of resistance. You can say 165, 170. that really would need to hold for us to see further losses. And as such, given the sort of outlook that's being portrayed this week, and given the fact that so far everyone's sort of beating on expectations, I wouldn't be surprised to see Goldman Sachs do something similar. And if they do, and they manage to break up above this sort of 170 mark, that could be a turning point in terms of the trajectory of the firm, and we could start seeing it moving back towards an uptrend rather than a sell-off that we've seen since around about H2 or second half of H2 2015.
And US stocks continue to surge as well, don't they? And that US jobs report really feeding into that. Let's talk about Amazon as well, because this is a company that's done tremendously well, up about 20%. Wow, it's done phenomenally well. And I wanted to mention this day that we had, the Prime Day.
Yeah.
Wow, apparently their biggest sales day ever.
Yeah, and I thought I was going to get in on
That's
that.
big.
I forgot about it. I'm a Prime member. I was gearing up for it. Then again, whenever there's a sale, it never seems to be anything that I want to buy, quite honestly. But yeah, it was their biggest day ever. We saw a 60% rise in terms of orders. Ultimately, you've got an incredible firm, continues to go from strength to strength. It continues to essentially gobble up business from your sort of bricks and mortar firms, and we expect them to continue. It seems like everything that they do well. For instance, I got a Amazon Fire tablet for the other half. Right. And now she says that she wants me to sell my iPad so that she can get one for me. So it shows you that actually it feels like it's more reliable. Good. So everything that they do seems to be good. Now, in terms of share price, that's exactly what we're seeing. Everything they do seems to be good, and that shows you. This is a weekly time frame. It's just incessant, the rise of this firm, and I'm certainly not going to stand in the way of it. Now, certainly we have seen pullbacks, but time and time again, it's been proven that every time you get a pullback, you should just end up buying it. It's just cheaper to get into an incredible firm. Now, note the fact that we saw that sell-off in February, and since then we've seen another 50% added onto this firm. So that really goes to show that buying on the dips when it comes to incredible firms like Amazon really does pay dividends. In terms of the shorter term price action, let's go on to the 4 hour and see how we look for the week. Now you can see that yes, we are seeing this sort of move lower at the moment. However, you could say that this is if we get a trend line in, you can say that essentially we've got a falling wedge pattern, which is a bullish pattern anyway, and you can see that we're possibly going to start breaking out towards the upside of that. So again, it's all about just buying on the dips really, and knowing to yourself time and time again over the years, it's been proven that it just keeps going up, and I'm not going to stand in the way of it, because I don't see any reason why this company shouldn't continue to outperform.
Mm-hmm. And apparently one of the biggest products was toilet paper, and apparently so much was purchased that it could span to the International Space Station. So it's just necessities in life. I want to talk about a different company completely and talk about Easyjet. Yep. Because this has really had some headwinds, hasn't it? And this is actually, again, I know we keep mentioning it, but actually because of Brexit, because of the consumer confidence element, because people maybe will decide not to go on holiday. Of course, you've got the sterling and the euro element playing into this as well, making the holidays more expensive. Easyjet, as we know, specialises in those short haul flights.
And cheap ones.
Yeah.
So you would think that someone that was taking a cheap flight probably wants to get a relatively cheap holiday, and when all of a sudden the pound's worth nothing, and all of a sudden, you know, the currency abroad seems to be a lot stronger, then it's not a particularly good situation for them. Add on top of that, and we've seen it again today in terms of the attacks in Nice, the fact that we continue to see these terrorist attacks in Europe, and each time that one happens, you've got to think that the sort of the sentiment of consumers, the willingness of people to go to these places would deteriorate to some extent, and people start thinking, maybe I'll just stay at home. And that's not necessarily good for the firm. We've also got a number of cancellations expected for Q3. They're penciling around about 1,000 cancellations for a number of different factors. Air traffic controller strikes over in France, and the likes and issues in Gatwick they're thinking is going to happen in Q3. So certainly there's a number of big headwinds. Like you said, look, the whole Brexit thing is not good for UK firms as a whole anyway, in terms of if we do go into recession, that's not going to be good for how much disposable income people have, and it's disposable income ultimately that drives the likes of Easyjet to continue to perform. So there's no wonder we've seen a big move lower, and you can see actually we've been talking about this stock for a number of months now. and ultimately it always looked like it was topping off to some extent anyway. That's now pretty much been confirmed with the fact that yeah, we saw these sort of topping moves, but the key move was below this around about 1207, that low that we had back in August 2014. We've seen that now. We've seen a break below that. We are rallying, but it makes me think that we could quite easily find this as new resistance for another leg lower. Now, ultimately, earnings from Easyjet next week aren't necessarily going to factor in a lot of the more recent issues. So, you know, the numbers might still be relatively respectable, and if we did manage to break up above 1207, then that could give us, you know, some sort of platform to see further gains. But certainly I have it in mind that there's a number of factors that they're fighting against at the moment, and things aren't as hunky-dory as they were back in, you know, 2015, 2014. They're increasingly becoming more difficult for Easyjet, and that's being reflected in the share price. So it's going to be very interesting to see if it holds on below 1207. If it does, then I wouldn't be surprised to see it move on to another leg lower in the coming weeks and months.
OK, Josh, turbulence to come then, quite seriously.
Got it.
All right, thank you very much indeed. That is a wrap from us as we wrap up another historical week. Britain now has its second female Prime Minister, stay campaigner. And Theresa May will take her first ever Prime Minister's questions on Wednesday, so the critics will be on guard as well as the opposition with their jeers as well. Have a fantastic weekend, and we'll see you next week. Goodbye.